Let's move on to our sixth learning goal. Now that we've explored gold and gold-backed currencies, let's more closely explore the kind of money that all nations currently use, fiat currencies. Here's a quick video that introduces the concept of fiat money. Note that although the narrator mentions intrinsic value, we have already established why it's not necessary for a money to serve its purpose.
Welcome to the Investors Trading Academy Talking Glossary of Financial Terms and Events. Our word of the day is fiat money. Money has no intrinsic value and cannot be redeemed, but it's made legal tender through government decree. All major paper currencies are fiat money. The value of the fiat money depends on the strength of the issuing country's economy. Inflation results when a government issues too much fiat money. Fiat money is currency which derives its value from government regulation or law. The term derives from the Latin fiat, let it be done, or it shall be. It differs from commodity money and representative money. Commodity money is based on a good, often a precious metal, such as gold or silver, which has uses other than as a medium of exchange, while representative money is a claim on the commodity rather than the actual good. The first use of fiat money was recorded in China around 1000 AD. Since then, it's been used continuously by various countries, concurrently with commodity currencies. Because fiat money is not linked to physical reserves, it risks becoming worthless due to hyperinflation. If people lose faith in a nation's paper currency, like the dollar bill, the money will no longer hold any value. Most modern paper currencies are fiat currencies, have no intrinsic value, and are used solely as a means of payment. Historically, governments would mint coins out of a physical commodity such as gold or silver, or would print paper money that could be redeemed for a set amount of physical commodity. Fiat money is inconvertible and cannot be redeemed. Fiat money rose to prominence in the 20th century, specifically after the collapse of the Bretton Woods system in 1971, when the United States ceased to allow the conversion of the dollar into gold.
What are fiat currencies? Fiat currencies are backed only by the trust in its issuing institutions. The trust, more specifically, is based on three things. The first being the trust in a country's economy. The second is its ability to service its debt holders. And the third is to be able to do both of these things while simultaneously being able to properly serve its citizens by investing in infrastructure, healthcare, and other needs. As you'll see in our next presentation, a country's central bank will always be able to service its government's debt holders, as the bank can always print more money to do so. But this comes at the cost of degrading the currency that debt is held in. This is a difficult balancing act that is largely held together by adjustments in interest rates. You could say it looks a little like this. But back to the money itself. To quickly analyze the properties of fiat as money, we can see that it is an excellent money over space, as it is widely accepted, very portable, very divisible, and very consistent across each unit. But all of this came at the cost of maintaining the money's scarcity. The scarcity component is the most important for a money to be able to store value over time. You can once again see that where each evolution of money failed, its successor made improvements. However, the abuse of the money printer by governments over the years has resulted in fiat currencies to increasingly deteriorate in value. So as we've already established, over time, fiat currencies do not stand strong as a good form of money. The temptation to print more is always too great for a multitude of reasons. Governments need to continue printing currency in order to fuel their economies or get out of crisis. During the 2008 financial crisis, the US government printed enormous sums of money to bail out the banks. Rather than inflation being felt in consumer prices, it ran through stock prices, and the bankers who crashed the economy enriched themselves with record bonuses. In 2020, during the COVID-19 lockdowns, the US printed approximately 3.3 trillion in 2020 alone, which equates to 1/5 of all US dollars in circulation in the same year. Fiat currencies are programmed to be printed to infinity. At a certain point, their abundance in a supply of money leads to their failure. To illustrate, here are some fiat currencies over time that have hyperinflated or lost the majority of their value and were abandoned. Their demise was mainly due to their lack of scarcity, as these governments needed to print enormous sums of fiat money to help them manage their debts. Sound familiar? These don't include the present-day Venezuelan bolivar and the Argentine peso, among many others. No fiat currency, or in other words, no trust-based paper currency that is unanchored by a physical commodity, has ever survived in human history. What makes us think the currencies we use today are any different? All fiat currencies in use today have been a 50-year experiment since their depegging from gold in 1971, and with our unmanageable debt burdens, are beginning to show signs of failure. Though in the long run, fiat currencies do not hold strong, there are some short-term advantages in using a money that lacks scarcity. The lack of scarcity in our money has allowed us to expand and scale our societies quickly. Easy money creation has allowed us to prosper over generations. It has provided the ability to stimulate economic growth, boost its country's exports, and stabilize countries during crisis. But this has come with trade-offs. Lack of scarcity in fiat money has resulted in inflation, wealth inequality, misallocation of capital and resources, loss of confidence in a nation's currency. All of the effects you see here are being felt more and more as time goes on. Here is a visual representation of the US dollar's purchasing power over time. Now, what does a non-scarce money do for things over time? Prices go up. To illustrate, here is a supply of money represented by a pool of water. When the supply of money expands, prices, like a sponge in water, must rise to suck up the excess currency. With an inflationary money, governments never stop printing more currency or adding currency to circulation. You could say that instead of prices going up, it's really the currency going down in value. Without a proportionate increase in productivity, easy money creation results in a rate of inflation that wages fail to keep up with. If the money printed was all put towards productive pursuits, this model might be manageable. But the debt burdens of Western nations indicate that this is simply not the case. There's no doubt that as time goes on, our purchasing power is going down. There are periods where we may not feel it, but as slowly as it may creep, prices will continue rising and wages will continue to stay unmoving in relation to those rising prices. Rather than analyzing charts to prove why wages won't continue to keep up with inflation, one can simply zoom out and see the societal trends that have taken place ever since the world stopped operating with sound money. It is reasonable to extrapolate from this trend that life will continue to become more unaffordable as we continue on our current economic model. What other economic shifts naturally emerged due to money not being able to store value over time? Increasingly having to chase this value via speculation and growing your money in bond and stock markets. Siphoning this value from people lower in the socioeconomic hierarchy through excess taxation and rent seeking. Seeking this value by financializing things that shouldn't be money. Of course, these are oversimplifications. There were many other reasons that contributed to these occurrences. However, as a money continues to lose its value or purchasing power over time, the market will find solutions to compensate. The money and its properties shape individual incentives. These incentives shape individual behavior, which then shapes collective behavior and culture. We live in a society that rewards greed, theft, and indiscriminate investment and consumption. The money really does shape the world. The market has been trying to make up for our money's flaws over time. The scarcity component has been sought through diversification into scarce commodities, like land and housing. Here you can see how investing in real estate attempts to make up for the inability of our money to store value over time. It can be argued that the need for diversification has been the result of operating with an imperfect money. Money being once again a store of value, medium of exchange, and unit of account. If we built our world using a perfect store of value, a perfect medium of exchange, and perfect unit of account, we wouldn't need to financialize everything, meaning we wouldn't need to make things money that shouldn't be money, like water, agriculture, energy, and housing. The financialization of housing is causing noticeable disparities today. You can see how rising housing prices in Canada and other countries is resulting in homelessness and financial hardship for lower and middle class citizens.
If we had a perfect store of value, medium of exchange, and unit of account, there also wouldn't be the need to seek value by investing in company stocks we didn't actually believe in.
In other words, if the globe had instant access to a money that over time became more and more valuable through its programmed, perfect mathematical scarcity, eventually nothing else would be treated as money. The only other things that would be invested in would be productive pursuits that seem to promise returns that will exceed the appreciation rate of that perfect money.
But in history, we have never had perfect money. Until now. Bitcoin is a perfect store of value, a perfect medium of exchange, and a perfect unit of account over time and over space.
Bitcoin is the best money in human history and succeeds as money in every imaginable domain. Once again, it is the perfect store of value, medium of exchange, and unit of account over time and over space. Reminder: the world naturally converged on the best form of money, which was gold.
It is reasonable to assume that over a long enough time horizon, this natural convergence will happen once again, but for Bitcoin. We now move on to our final learning goal: why people will choose to invest in Bitcoin as time goes on.